It's a party atmosphere here in San Francisco.
IO Ventures, peaceable, designed by seeing.
Newspepper.com.
More than a decade after the last internet boom and bust, another web startup frenzy is underway.
Everything is web-based.
Clara Shai is the CEO of Hearsay, a software company for social media.
We just talked to a handful of angels and venture capitalists, and we were very fortunate in that we had our pick of backers.
She's raised $3 million, and now more is knocking on her door.
Honestly, we weren't thinking of raising money, but now it's kind of landed on our lap. We may be open to it.
Shai is by no means alone. From New York to London to Shanghai, the hunt is on. Investors chasing the soaring valuations of private internet high flyers, wanting to get a piece of Facebook or the next Facebook. Thomson Reuters data shows venture capital has poured more than $5 billion into the internet space so far in 2011, putting it on track for the strongest year in a decade, though still well below the dot-com peak of 2000. It's a global phenomenon. One of the biggest financings of the year so far was led by Russian billionaire Yuri Milner. The bet, $1.5 billion on a Chinese company, 360buy.com. In fact, 15 of the 25 largest investments in the consumer internet space in 2010 were made to companies outside of the United States. International angel investor Fabrice Grindle has seen it firsthand.
Brazil is on fire right now. I invested in a company in March of 2010, so a year ago. And in a year, it went from zero to over $6 million US in revenues a month, with very little funding.
That's because the money goes further than it ever did before, thanks to cloud computing, open source software, and a network of social media that allows young companies to get the word out without spending costly advertising dollars. Several companies can now blossom from what it used to cost to launch just one.
They're everywhere, aren't they? Startups are everywhere.
Dana Stalder helped launch Netscape and is now a venture capitalist for Matrix Partners.
If you look at the financials of Zynga, or you look at the financials of Groupon or Living Social, these are very big businesses that are generating substantial revenue and substantial profits. The ability to build big businesses on very little capital has never been greater.
1 year ago, Groupon was worth $1.35 billion. Now, a possible IPO is said to be in the range of $15 to $20 billion. Forbes magazine calls Groupon the fastest growing company ever. In Groupon's wake, a wave of startups known as Groupon clones, a laundry list of names popping up in the U.S., and there's hundreds more around the globe. Investors are clamoring to get in. VC firms raised an impressive $7.1 billion in the first quarter of 2011, more than double the previous quarter, making it the best annual start for fundraising in the U.S. since 2001. Wall Street, not happy to sit on the sidelines, is joining the frenzy. Goldman Sachs turned heads when it announced an investment in Facebook pre-IPO that valued the high flyer at $50 billion. A year earlier, Facebook was estimated to be worth $14 billion. But competition among angel investors, VCs, and Wall Street is driving up deal valuations across the board, from seed to late-stage rounds, setting off a raging debate over whether this boom is another bubble.
I've heard, to my surprise, many venture capitalists who are saying, no, there's not a bubble. When you're seeing valuations double in the last 12 months for the same company, the same team, that feels like a bubble to me.
Grindle, who's invested in 50 startups, says valuations and deal terms are quickly becoming less favorable for investors. He's pulling back on new investments and exiting some old ones.
It feels frothy. It definitely feels like there's too much capital following too few deals.
Like 1999, some companies are raising big money with no revenue.
A keep button on every ad and a keeper to put them in.
AdKeeper has attracted more than $40 million pre-launch. It helps that CEO Scott Kernett has a track record. He started About.com and then sold it for $410 million. He says venture capitalists know the risk-reward equation.
Will there be companies that are, because there's capital available, that probably shouldn't get funded? Yes, of course. But the ones that pop through will be phenomenal.
AdKeeper already has a valuation of around $100 million, even though it won't officially debut until August. Still, Kernet insists there's no bubble. Ben Horowitz agrees. The co-founder of one of Silicon Valley's hottest VC shops, Andreessen Horowitz, he argues in a recent blog that deal valuations a decade ago were 10 times what they are today, and that VC money funding this boom is less than half of the dot-com peak.
Another big difference from the internet boom and bust of a decade ago, these are privately held companies. VCs and investors in a growing secondary market are providing billions of dollars in liquidity that otherwise would only have been found on Wall Street. It's allowing hot internet companies to stay private longer, but that's about to change.
Investment bankers and VCs say, get ready, a wave of internet IPOs is coming.
Some of them are trying to change the world, and they're not going to change the world privately forever.
The internet IPO pipeline is beginning to fill up, with all the new web stars expected to make their public debut in the next 12 to 18 months.
What goes up must come down.
Perhaps a decade is long enough to forget the bitter disappointments of the dot-com bust of 2000, when companies like Pets.com flamed out. Billions of dollars is banking on it. Back in San Francisco, Clara Shai isn't thinking about IPOs. She's busy battling other well-funded startups for office space and engineering talent.
I think we're at the top, at least I hope so. I mean, it is ridiculous out there right now.
Jen Rogers, Reuters, San Francisco.